We will go ahead and get started. Thank you for joining the final part in our three-part series, Strategies for Business Continuation. My name is Michael Wardy. I'm a certified financial planner and regional director at Source Advisors, where we work with our clients and their CPAs to identify and maximize tax incentive programs such as the Research Development Tax Credit, cost segregation, and energy efficient incentive programs. I would also like to introduce one last time during this series, Lee Boss and Ross Karp. Starting out with Lee. Lee takes a proactive client-facing approach in business. He takes the time to get to know his clients as well as their needs and goals. As a managing director and chair of the audit and assurance and the private company services group, Lee acts as a resource and technical leader for his clients and Mercadian. I'd also like to introduce Ross Karp. Ross is a certified long-term care specialist who is dedicated to the planning and implementation of a strong protection portfolio for individuals and businesses in order to protect against the unexpected. These include, but they're not limited to, life insurance, disability insurance, long-term care insurance, as well as other group benefits. As a broker, Ross works with major carriers to find the best and the most appropriate solution for each individual situation. Gentlemen, once again, welcome.
Thanks, Michael.
So on this final section, we are focusing on what is really, and all three of these different topics are incredibly important, but today we're going to talk about business protection. And just to recap, for those that have not watched the previous two, please go back and watch or listen to the previous two episodes. But just to recap, the first one we discussed succession planning and how a company can protect itself if key personnel experience or incur a catastrophic event. And in those conversations, we also discussed incentives for recruitment as well as retention. Today, we're going to take a look at how a company can protect itself if something were to happen to the business owner or other key personnel, aside from transfer of business. And there's a few potential scenarios, and I think a lot of people hear about these. I know a lot of business owners that we speak with, and collectively, the three of us have probably over 60 years of working with businesses, and we've seen and heard the stories. So just to start out with, what are the potential consequences if a business owner were to pass away or become disabled?
Michael, I can take that one, and thank you for having us on this final podcast. We look forward to the discussion today. But the issue in particular, closely held, smaller owned businesses, that the owner and some of the key personnel play such an influential role in the leadership and day-to-day activities in that business operation. So when you think about the risk of, the key owner or key employees becoming, disabled, or perhaps worst case, there's a death due to accident or other related issues, the business will just significantly suffer. I mean, in most businesses, the owner and the key personnel, they have the direct relationship with the clientele, the customer base. They play a very key role often in the production within inside that business. If it's a service organization or some type of manufacturing business or other business, they know kind of the ins and outs of that business like no one else. So the risk is that, if there's an event that causes either a disability where that owner or key employee cannot be there, or, an unlikely event of a death, I mean, the business, how does it move forward? How does it continue to service its clientele or customers? How does it continue to grow and bring in new customers? And, it just creates a ton of uncertainty. And we've seen this out in the marketplace, where when that type of event occurs and there's not a well solidified plan on how to move forward, that uncertainty, we've seen companies lose customers, lose clients, lose key personnel. They just don't have a real clear path forward. And that's incredibly detrimental to the business as far as losing customers, not being able to produce a service or a product, losing your key employees. I mean, it basically could shut down a business. And so really significant, but potential significant impacts.
And Lee, I just want to piggyback on that. I think when I think back on, all 3 episodes that we've done so far, I think the key theme has been planning, and more planning, and reviewing your plan. I think, everything we've said comes back to that. At the end of the day, putting that plan and implementing is one thing, but you've got to review it. You've got to keep on top of it, because without the plan, there's going to be chaos. And it's, we're talking about affecting people's jobs and people's livelihoods. So that's why, the planning for that worst case scenario, I know nobody really likes to think about it. No one wants to look at their own mortality or morbidity and do the planning, because they are being confronted with that. But it is important to have that game plan, to let your people know, let your family know, your key employees know that there is a plan in place. Here's what it is, so that everybody is working towards it, and that things go smoothly in the event something happens.
And that's, as we've talked through this, and I've in between each session, obviously I'm talking with clients and prospective clients, and just thinking about the impact. If the business owner, something happens to them and the business is not able, and I'm going to ask you guys this question as well. If the business owner can't pay the bills because they're the only signer on the checking account, it may seem like it's antiquated to say that, but it's still out there. You're not just affecting your family directly. You're affecting potentially a whole community. So if something were to happen to the owner and they're the only signer, how does that work? Like, who becomes responsible? Like, how do they, if they didn't plan properly, how do they plan post that issue? Can they?
Yeah, that's a real challenge. And I think that's the issue, the consequence of not doing proper planning. So, there's definitely an approach, Michael, that businesses should be taking to plan for this. And we did spend time talking about what I would refer to more as your orderly succession planning process within a business, where you're really looking at kind of long-term outlook and determining the skill set and the plan in place to transition responsibilities, if that's possible within the business, or whether there's ultimately a third-party sale that's necessary where it can't succeed. But the emergency succession is really critical. I mean, doing kind of a scenario assessment of what are all the things that likely could occur and how would the business survive in that situation. So definitely, we talk about emergency succession, that's more directed to our key personnel. So if we look at all the roles and responsibilities within the business, in that case, okay, the owner's got exclusive check signing, capabilities. No one else has the banking relationship. That would be something we go through as part of that plan and identify that as an issue. And then how do we mediate that? Okay, so there should be someone else within the business that has access to the bank accounts, has perhaps dual check signing capabilities. Maybe that's not somebody within the business, maybe that's the spouse. But setting up that plan, and more broadly speaking, I think about business continuity. You think about, what if a fire occurs in your manufacturing facility? What if there's an issue getting to your technology, your server locations, and business have thought through those issues and come up with appropriate solutions. A lot of cloud hosting services has been a very popular response to that, as far as how do we access our data if there's a fire in our building. Well, if you don't have servers on premise, they're more in the cloud, or they're all in the cloud, that mitigates against that risk. But to address your question specifically, I mean, I think it's a real challenge. I've seen companies in the face where they haven't had a plan like that. I mean, on day one after that incident occurs, I mean, it's really got to huddle together, the business, and often a spouse or a key family member, sometimes often a professional that might get involved in that, an attorney, an accountant, someone that's their trusted advisor, to step in and really just kind of figure things out as best as can. But it's definitely not the best case situation. So I don't know, Ross, you have any view on that too? I'm sure.
Well, I mean, as far as I think I agree 100% with everything you said. There's, without a plan, there's going to be, people who need to step in, and hopefully there's paperwork that says, okay, someone has signing authority. so that, bills can be paid and things can stay afloat for the business. As far as on our side of the equation, there are times where, especially, earlier in a business, while a business is building, and trying to find its footing, if something were to happen to the business owner, how will some of the bills get paid that the business owner has been responsible for, has been paying for? And so, there are insurance products out there that will help the company, which will, be the business overhead expense plans, so that if the business owner is disabled, they can, have this cash flow coming in to replace what they've been doing. So, some of the fixed things like utilities, the payroll and benefits, the insurances, rent, if the property is owned, maybe it's the taxes, equipment leasing, to covering a lot of those bills. I think it's important because if you're the business owner and you get disabled, you don't know if you're going to be coming back. And again, this is something we've said in the past. You don't know if you're going to be coming back. So you've got to keep the business going so that you're coming back to something that's thriving. And B, if you don't think you're going to be coming back, then you want to be able to sell something that's been thriving, and not take pennies on the dollar. And that's why, like, the type of policy I was just mentioning is more of a shorter term. Usually it has like a 6-month waiting period to make sure, if you're going to be out that long, but it only has like a 2-year benefit. So within 2 years, someone should know whether they're going to be able to come back or not and what they have to do, and so they can properly either wrap up the business or sell the business.
Yeah. So I know a lot of businesses, as they get into different situations, they want to have the funds set aside. And let's say they did some proper planning and they have the cosigner and they have the plans and they have the insurance and everything set up. But on top of that, they need to know that for an immediate need, they need to take out a loan. So when that happens, and when I was in the banking world, we would often ask business owners to do a personal guarantee. What are the drawbacks? I know some people say, "Oh, I always do that. It's not even a question. It's my business. It's my life. I have a personal guarantee on it. Not a question." Some people say, "Absolutely not." What are the pros and cons? I think from a planning perspective, you almost need to have that loan set aside, like a line of credit, and banks are asking for personal guarantees. Walk us through the drawbacks, or are there any?
Yeah, I mean, Michael, that's a great point too. Just as part of emergency planning or business continuity, is having that kind of backstop, which is really critical. And businesses should have a certain amount of liquidity or kind of cushion that they've built up over time. Something that they can draw upon, like an emergency rainy day type fund, right? So it's prudent as a business owner not to take every single penny out of the business. Most business owners are putting money in, investing, and continuing to see it grow. But you definitely want to build as part of your overall financial planning. This doesn't just apply to as a business owner, but as an individual yourself, having sufficient reserves and cushions for those rainy days. So I think that's just a real fundamental concept that you touched on that I wanted to highlight. But as it relates to that, having available lines of credit, we speak to a number of business owners and urge them to seek, evaluate whether that makes sense, that they have a line of credit, if they're never going to use it, but having it available. I mean, that's another source of kind of rainy day fund if it's needed. So, which I think is very prudent. As far as personal guarantees, I mean, many times banks will require that if there's not sufficient, collateral within the business, and depending upon the size of the loan facility. But I mean, some of the detriments there obviously is now the shareholders, now personally on the hook for obligations of the business, which, I'm not an attorney, and I don't pretend to be one. But, obviously there's a lot of benefit to separating the corporate versus the personal and really creating that veil. So, it creates protection between the business and the individual shareholders. So once you personally guarantee something, now you're personally on the hook for it. So, and that could limit the ability of you personally as a shareholder of seeking additional loans. If you want to purchase a second residence or refinance your existing mortgage or seek out additional loans and things like that, being personally guaranteeing anything, can limit your ability to possibly borrow in the future. So
Sure.
I would see those as kind of the two potential downsides to it. But the upside to it is, and businesses, and particularly those that are starting out, they don't have that collateral necessarily. So often it is necessary for a shareholder to personally guarantee loans.
And I think one of the concerns that we have to piggyback on that with is, what if something happens to the person who signed the personal guarantee?
Yeah.
Obviously, now their estate is going to be held responsible for those loans. And that could create a liquidity issue for survivors of the family. So a lot of times what people will do is they'll have their insurance policies, they'll have a collateral assignment in the policy where basically, so if they pass away, when the proceeds are paid, the banks or wherever the loans are owed to will be made whole, and then the balance can go to the family. So you don't have to do a set amount, as the beneficiary and say, oh, okay, $250,000 is going to go to Bank of wherever, but you may not owe them that amount over time. So you have the assignment, so they just reconcile everything and say, okay, here's the amount that's due, and then the balance goes to the beneficiaries. So there are things that people could do to protect their estate and their loved ones.
Yeah. Have you guys, with everything that's happened since COVID, have you guys seen a lot of acknowledgement of the necessity of doing planning? Have you seen that shift of, wait a minute, I could get COVID, and if I do as a business owner, what does that mean to my business? Or are people still in denial saying, well, if it happens, then I'll figure it? What have you guys seen in the market?
So I'll say in the early stages of COVID, I'm sorry, Lee, did I cut you
No,
off?
I was going to say, go ahead, Ross, because a lot of you're probably seeing a lot of this.
In the early stages, I think there was a lot of transition. So people were kind of frozen because they were trying to say, okay, what is going to be the next step? Getting people and businesses organized for their employees to be working from home. So there was a lot of focus on that. And then obviously the not knowing, originally, here in New York, it was okay, for the next 2 weeks, we're going to be on pause. And then 2 weeks became a month. And here we are, 14 months later, we still haven't officially opened up 100%, but we're, they're going to probably say that in the next week or sometime today, because that's what happened last time. So it's been an ever changing thing. So people in the early stages really were playing catch up and didn't know how to plan. So I felt for the first month and a half, people were frozen.
Yeah.
And then couple that with the market, also having some erratic behavior. There was a lot of concern. A lot of people were watching, and then obviously things started to normalize, and then people were having more of those conversations. The what if, it kind of took the, a lot of people think they're invincible. It's not going to be me mentality. And this was a wake up call for a lot of people. There were still some people who were in denial, thinking it was still, that's not going to be me. But there was a lot of people that it was a wake up call saying, you know what, it may be me, it may not be me, but we should start planning.
I think to dovetail on that, and I think you're spot on, Ross. It was like, people were just trying to figure out, how do I keep this business going? How do I keep my employees employed, keep the customer base I have, keep things as status quo as I possibly can, like such a high focus, right? And it's interesting, I've seen many businesses actually, not really focus on the succession or those type of issues, as they focused on, okay, listen, I've gotten through this at this point. Maybe now's the time to sell my business. I'm at an age where, I'm looking to potentially retire, in the near future. I've gone through so many different business cycles. This pandemic was kind of like the tipping edge, so I've definitely seen a lot more activity as it relates to clients that are looking to sell their business. And there's some change in the tax code in the horizon with capital gains, which makes it more beneficial, this year than in the future if capital gains double from a rate perspective, obviously. So, but that's definitely been a driving force. But I think it's really critical in all these issues that business owners really have a set of advisors. You mentioned, Ross, about the insurance when you have the personal guarantee, and that to me highlights an issue that, you only know so much. So having a team that you can kind of draw on and really look
Absolutely.
more holistically. But the other key thing is just separating out the emotional aspect, because, being a business owner is highly emotional. I mean, right? I mean, it's everything in life's emotional, but to the extent you can kind of assess if there's something that's bothering you, something that's driving a decision, get to the emotion of it and really evaluate that and make sure that, it's the right decision and it's not just an emotional reaction.
Yeah.
So that's definitely something that we've seen more with the clients we're working with is really trying to play that role. I mentioned it before, is kind of corporate therapy, but, asking the question and really evaluating their thought process and their decision making, and assessing maybe it does make sense, but maybe there's alternative ways or different ways to think about it.
That's fair. Okay, so I know we're getting to the bottom of the half hour. So, and again, thank you guys both.
Thank you.
Before we wrap up, I'm going to ask each of you to share a case study, a scenario. I personally love case studies because it just helps put everything together. But I want to hear a case study, short one, from each of you. We'll start out with of planning that went well, and you saw it from start. You experienced it from start to finish, and at the end, the planning was done so well that it was like you have this vision of how it should be, and it was. Each of you, can you share a case study like that?
Yeah, so I can start. I have a client that we've worked with for a long time now, manufacturing, in the manufacturing type business. And there are two shareholders that, were aging and also, looking to sell or retire at some point. And I think probably about, 5 to 8 years prior to that event occurring, there was a lot of discussion, both with the existing, the shareholders that were retiring, as well as a few up and coming executives, those that, held key positions. And they really had a great discussion and dialogue and evaluated, their options and how they could transition that business, what that would mean from both a leadership standpoint, the key roles and responsibilities, and identify where there were some gaps and, take corrective action, hire certain key employees as well to fill those gaps. But then also work on the ownership transition, because it's one thing to transition leadership, but it's another thing to transition the ownership or the dollars associated with that. So working with their banks, looking at other assets they had within the business and how they could structure that transaction that was both accomplish the objectives of the selling shareholders as far as monetarily and all those things. Mm-hmm. So affordable to the shareholders that would be acquiring that ownership interest. So I think that was a really great success story of taking time, having a lot of great collaboration, leveraging their advisors, speaking to their banks and so forth, and getting it done. So
perfect. Ross?
I want to answer it from the perspective of a client that I was working with who was dropping the ball a little bit on things.
Okay.
I remember I was sitting with two partners of a company, and we were really focusing on partner A for family planning, but his partner was there. And I remember them making a comment during our meeting, how they won't fly together because if something happens, what is the effect on the company? And this is a company that had been around for about 6-7 years. And I said, well, what is the plan if something does happen? They're like, oh, well, we've already done our buy-sell agreement. And I said, great, because they understood that if something would happen, the estate would be the new partner. And they made it very clear that was not happening, that they were not comfortable with that. So they made sure they had their plan in place. And what happened was, yes, they did have a buy-sell agreement. They had a written, everything was written in the partnership agreement. The problem is that they valued the company originally at $1 million. So they had a $500,000 policy on each other. Problem was 5 years later, the company was worth 10 million. And they had never gone back. They had never gone back and reviewed the life insurance portion. So they're both sitting there with a $500,000 policy thinking they're set, and no one ever said to them, you need to go back and review your insurance and have it updated. So luckily, we were having that conversation on the personal side where we were able to step in and do something on the business side for them too, to get them protected. Because the business owners made it very clear they wanted nothing to do with the other one's spouses.
That makes sense.
Yeah, so I think that kind of really solidifies the whole point that we make is planning and reviewing that plan consistently.
Yep.
Because a lot of times people will do their plan, they'll put it in the drawer, they'll forget about it, thinking, okay, we're done, we've done it. And yes, you have, but if you don't review it, your plan's outdated and things do change.
Absolutely. And the reverse, because I've seen where businesses were flourishing and doing great, and they had the insurance to cover for that valuation, but then something happened to the business or dispositions happened and the business is not worth as much and they're overpaying. So you're absolutely right, Ross. You need to have that review. Okay, before we wrap up, Lee, one scenario where there was no planning and it was not one of those beautiful case studies that you rave about.
Yeah, so I think of actually a situation that happened recently in pandemic where it was a service business, and the key shareholder partner was a pretty big, obviously big component of bringing in new clients, but also working on those clients. And they had maybe about 5 or 6 employees, and unfortunately, that shareholder passed away due to COVID without really any plans in place. So at that time, the spouse, I believe the brother also kind of stepped in and try to do what they could to, protect the business, which really meant, getting a business broker on board to, sell the business. But in the process, they lost a lot of clientele. They lost a lot of key employees. So I think that, and it's a very sad story. But I think, in some ways that's hard to mitigate against, right? If you have a business that's of a certain size where the owner plays such a vital role in the business. But there are ways to definitely mitigate and protect that and at least plan for it in the unlikely event that occurs. But that was definitely not a great story, not a great outcome. They ultimately sold the business, and but I think it was more obviously like a fire sale type situation that happened.
Yeah. Ross?
I think one of the things that we see most commonly is people procrastinating. We meet with them, we talk about doing a plan, and they get very swept up in the business that they're doing and don't take care of the personal needs or the insurance needs, to protect themselves. And there have been many times where I've seen people procrastinate, and by the time they get around to it, there's a health change. Now they're either not insurable, or their insurance is significantly more expensive than had they not procrastinated. It would be less expensive. So I think the biggest thing we see, where things don't go well is when there's procrastination and then there's a new health issue. I always say to people, look, your health now, what it could be now. Don't wait, because we don't know what tomorrow brings.
So true.
None of us have an X-ray machine to know what's going on inside of us. And, we all think we're the pillar of health, or even if we don't, even if we acknowledge, we've got some health issues, sometimes we don't realize how bad they can be. And if we wait, they just get worse. If you're waiting because of your business is getting in the way, it means also you're probably not attending to some of your health issues that should possibly be there. So I think procrastination is the biggest thing and pitfall I see for people, and what creates some of the horror stories.
Yeah. Okay. Well, thank you guys for sharing those. And that's a key part of these conversations, is helping people understand you're not alone in this island of business, that there are scenarios on both sides. Focus on it's the key takeaway from all 3 of these workshops. First and foremost, and really the constant, is build a consulting team, rely on them, of trusted advisors, contact them, get connected with them, get that whole team together to plan for your future, for your business, and for your family future. It's not a difficult thing to do. And once you take that first step, it just starts rolling. It starts moving forward. So thank you guys again. I appreciate it. For our subscribers, audience, viewers, listeners, thank you. And I hope this information on the series helps you continue your business, the value behind on it. If you do have more questions, definitely get in touch with Lee, get in touch with Ross. We will have all their contact information on all the different platforms that we're going to be relaunching the recordings out to. Make sure you get in touch with them and make sure that you're planning properly. Gentlemen, thank you again.
Thank you. Greatly appreciate it.
Thank you,
Absolutely.
Michael. Great job. Thanks, Ross.
Enjoy the
Thanks,
rest of your
Lee.
day,
Great.
everyone.
Bye,
Take care.
everyone.